Good afternoon, Scott Redler, T3 Live. Welcome to Monday's recap. I got to be quick and snappy because we're starting a little late. Bottom line is Friday, a few different warning signals out there. You had the S&P and you had the Dow open up, trade lower, close at the lows of the day, little breakout or failure. And then you had the bios taking it on the chin that started weeks ago. You had some high beta names taking it on the chin that started weeks ago when they didn't make new highs. So lo and behold, today we talked in the morning call about if we trade below Friday's low, we could get a quick short, and then maybe it turns into a red dog later, but you never know. But at least that spot was a spot to reduce risk or a spot to put in some shorts. And let's take a quick look around the horn here. First is the SPX. Okay, you have a lot of lines in here, but this is actually an old chart. I got to go through this because someone didn't refresh from about a week ago. Anyway, here was your little breakout failure on what was that, Friday? Okay, not a great or not a big thing to worry about, but then you had Friday's low. Once we took that out, the selling intensified. You still are in this wedge, so a lot of bulls are like, oh, who cares? What's going on? The market still looks good. Da 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 da. And you know what? From the indices, it looks pretty good. From a stock perspective, it's been a little painful if you've been holding your nose and going underwater with a lot of the high beta names. My thesis, and I talk about all the time, is the 8 and 21-day moving average for active traders that trade for P&L and cash flow. When these momentum names lose their 8-day, I typically don't hold them for more than just a trade. I could try and hold them for a trend when they're trending above and they're getting tired and they're breaking out. But when a high-level trend changes or composure starts to break, you have to recognize it. You go to Netflix first. Netflix showed you that right here. Okay, this was, I guess, that from that old chart here. Boom. Gap up, hugging the 8-day, broke below it, never reclaimed it. Sometimes it reclaims it fast and you have to get back in and you feel like you're upset with yourself because you sold it. But more times than not, if you sell it when it breaks the 8-day, you save yourself some money. And then when you get confirmation, when it goes below the 21-day, boom. And now you did have a little feeble bounce attempt in here that wound up failing into the 21-day, and now you have downside follow-through. So tomorrow, not sure what's going to happen, but you probably shouldn't be long, and being short Netflix after a big move lower is a little difficult. So we now have today's low to trade against, which is what is that, 368.80, and we'll see if we get a red dog reversal there, or they do a little bear trap or whatever it is. You could have saved yourself some pain and actually made some money from the short side looking at this chart here. And then this morning we talked about Google breaking lower, okay, or breaking down a little bit. And here was the chart. Okay, here was your trend line coming in. It broke below it, came a little bit back above it, but you didn't have to wait. Google was up $3 pre-market. And with that said, that was your area to get short if you were looking for that, or at least stop yourself out. You had this low, which was 1182, then you had that low, which was 1172, and boom. Okay, and here's when it broke the 8-day. Here on this day also, when the S&P made new highs, Google didn't. A leadership stock showing a small divergence. Clue. Then you go to Facebook, which we've been talking about this head and shoulders top. Left shoulder, head, right shoulder. I know I was trying to short it, last week and didn't have much traction, and then boom. It's trying to hold the 50-day now, but truly I don't think that today's low is going to stick, but we'll see. Here is, I guess, the measured move, and the measured move takes you down a little bit closer to this gap. But if you were looking for that quick active trade, there you go. You know how many times it was upgraded in this zone and didn't get anywhere? That tells you something. As far as Twitter, I know I tried to be long it a few times in here, right? We tried to be long it thinking that this descending channel would break out to the upside, cheating a little bit, getting in early. I lost money trying it. But then once it broke this, out of the way. And now here it's trying to get below this 50, which it did. And now you have bigger support at 46 and wait for some type of signal before getting in there or something different. Still only had 1/4 of earnings since being public, and it obviously wasn't impressive. So with that being said, we'll see how many quarters it takes before they show that they could expand their user base and monetize it, etc. I still am saying that this is not the all-time high of Twitter. Not sure when it gets there, not sure when it gets back on course, but at some point I think that gets taken out. It's just a matter of, this is a shorter trend, noisy, whatever. Tesla, that was actually where I made my money today, because we were talking about the momentum leaving Tesla. Okay, you had this upper area, this upper flag This upper flag wound up getting resolved to the downside when it held the 21-day, held the gap. Feeble bounce, very feeble, and broke below it. You had about a good 5 minutes to be short below 227.50, and it wound up going, filling the gap, almost making it down to the 50-day. Did come off, but nice trade. You know, this was on, I think this was on the price point sheet, not sure, but anyway, this was a signal. Below the 8-day, below the 21-day, look out, momentum name. Today for Apple, wasn't a blockbuster move, and I guess you had to be long overnight. I was long some, and I wound up losing in Apple because I added to it, because I said, you know what, if this is the trade where it's going to break through this downtrend, I need to be in more. And it didn't really give you much. It was strong, but didn't give you another trade. Didn't take out the high. But at this point, this is what we have here. 535. That's your gap. Can we digest above the gap and go again? We'll see. I'm going to try and stay with it. If that takes place, I'm still in Apple. Microsoft still acted pretty well. I know I got out of it on, I think I got out of it on Friday, and then today, small red dog reversal, got back in, flagging. We'll see if this could help be a spot for, I guess, people to hide some money. This OVTI actually wound up looking good. I got in it today. Still held the gap. Tried it a few times and lost. This time, you know, closed strong off the area, breaking this. So maybe this can continue. The banks are still hanging around. Bank of America came into the 8-day. I don't like the fact that it came in and retested this prior high so quickly, but you know, we'll see. Typically, when you get a breakout that doesn't hold higher, it gets wishy-washy. But I guess as long as it still stays above, I would say this area, try and stay with it. Citigroup is one of the banks that actually had a better stress test than people would have thought. So it had a big move. Now it's holding higher. I would say as long as it stays above this 49, I'll stay interested. And JP Morgan actually outdid everyone today with engulfing Friday's weakness and holding higher, giving some hopes that maybe the banks could show some strength and you can stay with it. And really, guys, this is what goes on. You could have a great idea and execute on it wrong because you're not seeing things straight and you tried a few days before and you got worn out. Or you could have a bad idea and be frustrated and turn it into a bigger loss because you got stubborn. So what you want to try and do is, if you have a good idea, you execute on it and you make money and you stay with it and you go with it. And when you have a bad idea, you're in the same mind frame where you know you're wrong, you take your licks and you walk away and don't turn it into a disaster. Lots of traders right now are turning big losses or what could have been small losses into disasters by having an opinion saying, oh, this has to bounce here or this can't go any lower, and who knows, because it can. Right now, a lot of the momentum names have broken down and they've come off the highs, but the markets did not yet. The S&P is still 2% within all-time highs. So the question is, will the indices follow and break lower? And if that's the case, these momentum names or some of these names that are showing relative weakness probably go further down. Or if we continue to hold in here, maybe we're a little bit closer to some kind of tradable bottom that we'll see through a signal. But at this point, I think you need to take trades. The market's vulnerable, and I don't want to see you in harm's way. Make sure you have a reason for being in a trade, and make sure you know your time frame, because we've seen a lot of dislocations, and they haven't added up to much except for in individual names if you've been stubborn. And there's been a lot of them that have given you really no reason to own them except for opinions, and at this particular point, I'm not going to get into them. Let's just get into thinking clearly, thinking positively, making good trades, making progress. Cash is a position, and just maneuver this market with quick feet, because there are things to be done. There's ways to save yourself some pain, and you don't have to hold your nose and go underwater. And you also don't have to be in anything or everything if it looks like it's going to rally. Pick what's comfortable for you. See you at the morning call tomorrow. Have a good night.